assume that your company as a lessee signed a lease contract with a lessor for 3 years starting from January 19 up to December 2021. And the monthly lease payment is 10,000. So this is a lease contract to rent office building, for example, and this is the monthly lease payment. One more assumption in this case that the interest rate implied in the lease is 6%, and this interest rate is annual interest rate. Now, due to COVID-19 pandemic, the lessor gave the company a relief from some of the lease payments starting from April 2020 up to December 2020. So let's assess whether we have met the 3 conditions stated by the amendment or not. The first condition, that the consideration of the revised change or the revised consideration after the change mustn't exceed the original consideration. Actually, if the lessor is going to relieve the company from all of these payments, so it will be deleted. So the revised consideration will definitely be less than the original consideration. The total price will be less than the original price and the consideration in the lease contract. So this is the first condition. The second condition is related to the maximum period that you can use. Now, because the lessor gave the company the benefit of relief of some of the payments up to December 2020, and the amendment is saying that the maximum period to get the benefit from this change is June 2021. So now the second condition also is already being met, and now all the conditions being met because we don't have any other conditions. So now we are ready to apply the amendment. Before applying this amendment, let's calculate the lease contract as if we don't have any change. I mean that let's apply the lease contract as we have just signed the lease contract today. So assume that we are still in January 19. Let's see what are accounting entries and what are the calculation that we are going to run. First of all, we have to build the financial model like that we have to start with the beginning balance of all of your lease liability from these lease contracts. And then you need to start applying or calculating interest on a monthly basis. Then from the payment that you are going to pay here, we are going to split it. Part is related to the interest and another part is related to the reduction in the lease liability. Okay? Then if you are going to reduce your lease liability, so the beginning balance minus the reduction, it will equal to the ending balance of your lease liability. And at the same time, you have to start recognizing right of use of this lease contract, right of use assets from this lease contract. And from this right of use, and because this is a long-term asset, so you need to depreciate this right of use. So you are going to depreciate the right of use, and then you have to calculate the book value each month after the depreciation. So this is the story of what I'm going to calculate now in this financial model. The first thing that you need to do in order to run the financial model and run the calculations here is to convert this annual interest rate into monthly interest rate. Let's understand why. Because your monthly payment, it is a monthly, but you have annual interest rate. You cannot use in the discounting process annual interest rate with a monthly payment. So you need to convert this annual interest rate into a monthly interest rate. In order to do that, we have to use the following equation. 1 plus the annual to the power of, you need to convert this annual interest rate into a monthly interest rate. So you need to get a rate for 1 month. So it will be 1 to the power of 1 divided by how many months in the annual rate? It's 12 months. So we are going to say divided by 12 minus 1. So the rate on a monthly basis will be 0.41%. This is the conversion, or how to convert from annual rate to monthly rate. Then you are now ready to use this monthly discount rate in order to use it in the discounting process. So in order to calculate the beginning balance of the lease liability of this lease contract, we are going to use the net present value formula or function. So we are going to say NBV. What is the rate here? We are going to use the monthly rate. And where are your payments? These are my payments. So I am going to select it and then enter. This will be my lease liability as the present value of my lease liability in the first day in the lease contract. So this is the beginning balance of the lease liability. Then you need to calculate the interest because this is a liability and you are going to pay in the future. So you have to calculate the interest. The interest will be always calculated on the beginning balance. So you are going to say that this beginning balance times the interest rate here, which is we converted to a monthly, which is 0.49%. So this will be the interest itself. Sorry, there's a mistake here. times the monthly interest rate, and we need to convert it to now. It is the interest 1,604. So this is the interest on the first month in the lease contracts. Now, if you are going to pay 10,000, part of it is the interest, so the reduction will be in the reduction in the lease payment will be the remaining. So the reduction is 8,396, and this is the reduction in the lease liability. Now come to the ending balance. If your beginning balance 329, and you reduced it by 8,000, so the ending balance will be 321. So this is the ending balance of the lease liability. Now let's calculate here for the second month. The beginning balance of the second month will be the ending balance of the first month. So this will be the beginning balance. Again, you have to calculate interest on this beginning balance. So you are going to say the beginning balance times the monthly interest, this one. So you are going to calculate interest 1,500. So the interest is decreasing. How much is the reduction? You are going to say, if I am going to pay 10,000 cash minus the interest, so this will be a reduction in the lease liability. How much is the ending balance of the lease liability? Again, you are going to say my beginning balance of the second month is 321, and I'm going to reduce my lease liability by 8,400. So this will be the new ending balance at end of Feb. And you are going to continue the same process for the full 36 months. So you are going to say, okay, this is the full calculation. This is the full calculation, tick tick, up to the end of ending balance of the last month will be 0. So this is the calculation in the financial model, that your lease payment at the last month is 0 because you bid everything. You bid all of the lease payments stated in the contract. You bid all of that. You considered all of the interest. Now your lease liability at the last month is 0. Okay, now let's calculate the depreciation. Assume that we don't have any initial direct cost in the beginning of in the lease contract, so either related to the lessor or the lessee. So the right of use asset will equal exactly to the beginning balance of the lease liability. So this is the right of use of the asset. So let's calculate it here. This is the beginning balance of the right of the use of the asset. And in order to run the depreciation, we are going to divide it by 36 months. So this will be the monthly depreciation. So this is the beginning balance of the right of use assets, and this is the depreciation in the first month. So if you deducted the depreciation from the beginning balance of the right of use, you will be able to reach to the ending balance of the right of use in the first month. So let's say that this is the beginning balance of the right of use, and this is the depreciation for the first month. So this will be the book value of the right of use after the first month, or at end of the first month. Again, if you would like to calculate the right of use at end of the second month, so you are going to say this is the beginning, so this is the ending of the first month minus the depreciation of the second month. So this will be the new value of the right of use at end of the second month. So we are going to repeat for the full 36 months until we reach here to 0 at end of the last month. This means that the right of use assets had been depreciated over the 36 months to equal to 0 value at the end of the last month. So again, let's recap again what we have done here. First of all, we converted the annual rate into monthly rate. Then we calculated the present value of the lease payment, and this present value of the lease payment is consider all of the cash payment that we are going to pay, considering the monthly payment, the monthly interest rate here. So this will be the present value of the lease payment. I mean, this is the lease liability at the beginning of the lease contract. And because we are going to pay something in the future, and this is a long period, so we have to calculate interest. And the interest here, simply you are going to multiply the beginning balance of the lease liability by the monthly interest rate. So this is the interest. And if you are going to pay 10,000 and part of it is 1,600, this is the interest. So the remaining value will be the reduction in the lease liability. And if your lease payment at the beginning of the lease contract or at the beginning of the first month is 329, and you are going to reduce it by 8,000, so the ending balance will be the difference, will be the remaining 321. So this will be the ending balance, and you are going to run the calculations up to the end of the 36th month. So you will find that the lease liability is reached to 0, and this is the ending balance of the lease liability for this contract. And this means that you paid everything and you don't have any other obligations related to this lease contract. Then on the other side, you have to recognize an asset in your balance sheet related to this lease contract, and this asset is called right of use. Right of use assets will be equal to the value of the lease liability in this case, because I don't have any initial direct cost, and this will be the beginning value of the right of use. And you have to calculate depreciation each month simply by dividing this beginning balance of the right of use over the 36 months. So this will be the monthly depreciation. And if you are going to depreciate in the first month 9,000, and this is the beginning value of the right of use, so this will be the ending balance in the end of the first month. And you are going to say ending balance of the second month equal the ending of the first month minus the depreciation of the second month, and you are going to do the calculations up to the end of the 36 in order to reach to 0. This is a very brief explanation of the accounting for lease contracts under IFRS 16, and definitely there are other details related to lease remeasurement, lease modifications, the type of the lease payments, what are the fixed payments and what are the variable payments, and what if there is a change in the variability in the lease payments. So all of these are accounted under IFRS 16. Now let's record the journal entry as per the amendment stated by ISB recently. Okay, now first of all, we have to record the interest. So we are going to say sum of the interest for this period, which is from here up to December 2020. So this is the value of the interest for this period. And we have also to reduce our liability. Why? Because actually I utilized the building and the investor didn't ask me to pay money, so I am not going to pay any cash, but my liability had been reduced because the investor agreed with me on that. So I have to reduce my liability. So I'm going to say the lease liability will be reduced, so it will be debit. So I'm going to say the sum of the reduction here in the lease liability for this period that's agreed between me and the lessor. So this will be the value of the reduction in the lease liability. The total value of these two figures is 90,000. Usually, without any change in the lease contract, I have to pay cash, which is the value here, which is 90,000. But because I have agreed with the lessor that I'm not going to pay cash, so it will be considered as other income because I got a benefit from the building. I didn't pay cash, so it will be a gain or income for the company. So it will be recorded as other income. So the other income will be the sum of these figures together, which is exactly the same, which is 90,000 here. So this will be the other income. Okay, now we have to record also the depreciation, sum of depreciation expense for this period. So this will be the depreciation expense for the period that I agreed with the lessor to have the change or to have to relieve of the lease payment. So this will be the depreciation expense, will be recorded as usual in the income statement, the P&L. So this will be the depreciation expense for this period. And at the same time, you have to reduce your right of use. You can reduce the right of use directly by credit on the right of use, or you can create an account which is called accumulated depreciation for the right of use, and you have to make it as a credit. So I'm going to say this will be the reduction, so this will be the same value of the depreciation, which is here. This will be the reduction in the right of use. So now you recorded the full journal entry and everything is stated. This is the amendment issued recently by ISB for the change in the lease contract due to the COVID-19. Remember, you have three conditions. If the three conditions together, all of the three conditions have been met, so you have the choice of applying the amendment. And again, it's a choice, it's not obligatory. If you don't have all of the conditions together, so you cannot apply the amendment and you have to continue doing the accounting as usual, as per the lease modification stated by stated under IFRS 16. I hope the explanation for the amendment issued by ISB is clear and helpful for you. Thank you. Assalamu alaikum.